Hello, welcome, and happy Wednesday, everybody. We're going to give this another shot. Hopefully this is a little bit less choppy, but we're going to go live right now to the Fed. What does Jerome Powell have to say today about the rates? This dipshit.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived. a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Do we want to listen to these questions too, or what do you guys think?
Yeah.
Oh,
I'd say
or is
so.
that you're muted?
I was gonna say, I think the questions are usually pretty good to listen to.
Okay, let's do it.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry. Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timorosa, the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith for the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting. And now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point. Yeah,
so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, it's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply. And we know that because the unemployment rate has ticked up. So, that's what I meant by that.
We can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028 at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass through of the tariffs into inflation has been slower and smaller. The labor market has softened, so the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market. And so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that, but it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weigh them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right there that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a really great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second, certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rear view mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Of course, I'm not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Bank system, Federal Reserve system, and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to
It's enough of that bullshit.
Pretty
Bye,
damn
Bitcoin.
boring.
Have a good night. See you.
I was
next
so
week.
bored hearing him. Oh my god, it's just
Oh
the same
my
shit over
God.
and over again.
Yeah.
Forrest, you want to share the link in the chat just in case people want to go to it or something?
Sure.
Nobody does.
Yeah, nobody does bullshit. It's all just garbage.
100% garbage.
I made a bunch of notes going through it, but I mean, basically, he's saying that labor softening is more of a risk than inflation because these two things that they're trying to balance, right? The dual mandate of stable employment and stable prices, they directly affect each other. So if employment goes down, that means people have less to spend, which means they're not willing to part with their dollars, which means less demand and competition for goods. And when there's more demand for those competitions and goods, or there's more dollars flowing into those goods and services, that's going to raise the price, right? So these two things directly affect each other. So if employment's softening, they're cutting rates so that money is easier to come by, so that inflation doesn't go down too fast. Kind of crazy, but that's their.
It's made so complicated intentionally. They don't want people to understand, to get this, to get where it's going.
Whatever you were saying there, Forrest, like that makes total sense in a fair market.
Yeah.
Right. Like if people are losing their jobs, they have less money to spend. So they start picking and choosing what they spend their money on, which overall drives prices of things down because there's less demand for, what would you call it? Things that don't, for wants essentially. So that's what would happen in a free market, is prices would actually come down. So why do we need somebody to try to balance them? Like, isn't that the way that things should be? And that's the way that things would be on a Bitcoin standard. Because if you think about it, if nobody had the ability to just create more sats, then prices would fall because they couldn't just stimulate the economy with more cash to keep, essentially what you're saying there is they don't want deflation, or what do they call it? Stagflation?
Stagflation is one thing they're trying to balance, like the no growth in the employment and higher inflation. That's what stagflation is. But it's really like it comes down to this, right? This whole time he's talking about, oh, we're forward looking, we're using data that's It's going to be out of date by the time we're using it. We can't look into the rear view mirror to have made the right decisions then. Like, why are we relying on an organization to set these lending rates that is looking at outdated information? Like, if the market was to decide, if there's no Fed, if the market wants to lend at a certain rate, then they will. If nobody's wanting to borrow at that rate, then they won't borrow at that rate, and the lender will have to lower rates. And it happens in real time, or as close to real time as possible. Instead, it's all delayed because the Fed is this lender of last resort, and it's delayed, and interest rates are totally artificial. Like, interest rates are way lower than they should be. Like, that's one thing that I have a real kind of like maybe difference of opinion, but there's a lot of suit coiners that talk about how the Fed should have cut earlier and they're way behind and all this. And I just think they shouldn't even exist. Like, it doesn't matter that they should have cut earlier. Like, they shouldn't be artificially lowering the interest rate to begin with. The interest rate should be what the market demands it to be.
This is where all the manipulation comes from. So what they do is, okay, so let's think of it from the perspective of monopoly. Let's say if somebody needs to pay for a property, or they're gonna lose because they don't have any cash, what the Fed is essentially doing is they're just giving them unlimited loans. It's like, do you guys remember in The Office where Kevin's like Keleven?
Keleven number, yeah, to make everything work out evenly.
Yeah, so that's essentially what this is, right? This is the Keleven. Right, this is like, it's like, okay, shit, our numbers don't work and the market's about to collapse, so we need to throw in a Keleven. Right?
Dude, that's so funny. That's exactly what it is. Yeah.
That's it. It's like, it's so fake. Even the guy, like, what he was talking about, man, it was so bullshit. It's like he doesn't believe it.
No. How can you? You can't be this deep into it and actually see what's going on and realize, like, he has to know it's bullshit. There's no way you can't.
And this is what I think this is what you were referring to before there, Forrest. You were saying how they can just fake the numbers. Like, all these numbers are so fake. They can, if there's a problem, they just print more money and throw it into the economy and they solve the problem, right? And what they do is, so to anybody who's looking at this, anybody who's watching this, you can see what you see here is basically the amount of assets that the Fed owns. Right. And the Fed will continue to own more and more, because what they'll do is they'll print money, they'll buy the assets from the market so that prices don't naturally come or interest rates don't naturally go up. Because what happens is, if there's too much debt, the market isn't going to want it, and the people who are borrowing need to offer more money to the lenders. If something like this happens, they don't have to do that, right? Because what's happening is, if the Fed is taking supply out of the market, it's basic supply and demand. Like,
they're also taking the risk. So, like, at these times of spikes, so in 2008, they're taking on all of the risky loans. They bought all of.
Is there really risk though? Because it's a fake organization.
There's no risk for them, but there's risk in the market, and the market should have, like, they over leveraged on bad loans. They took on too much risk, and they're being bailed out. Like, that's what the Fed did. They had the TARP program which was like toxic.
This was TARP, right?
Yeah, that was TARP. It's literally like the first word of that Scrabble word is toxic, right? Because those loans were bad, and because there's no risk to the Fed to take those on, because they have the money printer, they can take on the risk that the market should have absorbed and should have been punished for taking too much risk.
Yeah. So this is the Keleven.
Sorry, not toxic. Troubled.
This is the Keleven right here.
Yes. And they did another one during Silicon Valley. They did another Scrabble word. Where you just throw down the Scrabble tiles and rearrange them and then make up a thing from it. Can't remember. It was the bank funding program or something.
What was it called? The bailout?
No. For Silicon Valley Bank?
Like in the 90s? Oh, Silicon. No, I'm thinking something else. Plunge Protection Program, PPP. I think that has to do with the stock markets. If the market ever dropped, which is also insane, the fact that they have the PPP, where if the stock market drops a certain percentage, they just print money and buy up the shares. Like how many, like, do you think that they resell those, or they just stockpile those shares that they have to buy to bring the market back up?
I don't know.
They just keep adding it to their balance sheet, don't they?
I think they let some of it roll off because a lot of what they buy is debt, right? They'll like even the mortgage-backed securities or whatever. They just allow those to like roll off, a lot of them, or they buy treasuries. Like they buy a certain amount of treasuries, and what we've seen is they've bought less than they had before, which allows is basically them slowing down their contribution to money printing, right? So we've seen that. That's what that chart showed as well, was sort of a peak, and then it's gone down. That's them allowing those securities to roll off their balance sheet.
Yeah. And the crazy thing is there's no end to this. It'll keep going. It'll keep getting worse. Like it'll just they'll keep printing more and more money. There's like that. I don't know if we included in this one. I don't know if people saw it in this one, but that video that you showed with Neil Kashkari, can you share that again for us? Maybe that like it adds more context, right? Because there's unlimited money at the Fed. There's literally unlimited money. There's no limit to how much money the Fed can print, because they can print it, and we're working for it, right? We're giving our time, our energy, our effort, our skills. We're putting so much time and effort into learning stuff, and we're giving it away for shit coins.
To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe. Your banks are safe. There's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
What's crazy about this to me is that is not something he's just saying because people are worried about their cash at the ATM, if there's going to be cash when they're withdrawing. That is a statement that is true no matter what. There is an infinite amount of cash at the Federal Reserve at all times. Anything arises, they print money. They always do this. They could completely, it's just a total sign of their ability to infinitely print the US dollar, and they're 100% ready to do so at any moment they need to.
It just seems like they have a big spreadsheet now. Like before the digital age, they at least had to work harder. I feel like there was actually energy that went into creating money. Like
and there was paper.
And there was paper.
There was a limit.
Which you needed trees to be cut into, to be turned into cash, so you could argue that even though it was still in a fiat dollar system that wasn't backed by anything, at least at that point, like they required some work to create money. But now it is just a giant spreadsheet. And that Clevin thing is perfect, because I remember working as a CPA myself. We called it a plug, where you'd spend hours trying to find the difference there, or the missing part of it, and you just plug in a number, and all of a sudden everything balances. And I feel like that's what they have, is just a giant spreadsheet that people make their financial decisions based on, which affects the next person and the next person. And it's not a free market. It's just a completely manipulated market. And I think the main takeaway from me, like there's 300 people watching our stream right now who are watching this. And I don't think there's anybody in this chat right now who believes anything that these people say anymore. And so they have this dual mandate where they have to balance these things. But part of that mandate is that people actually have faith in their decision-making, trust in their decision-making. And I feel like it's at an all-time low right now. And there's really nothing that they could ever do to turn that around. Like the trust in the Federal Reserve System. If you think back 10 years ago, how many people knew what the Federal Reserve was? I'm sure most people assumed that it was just it was a branch of the government, like the financial arm of the government. But since then, I feel like there's just a big awakening of people who are coming to this realization that they're not federal. I mean, they have some ties to the government, but they're not federal, and they can just create money out of nothing. And the implications of that money creation for everybody, it just seems like a one-way street of people waking up to this manipulation nonsense. And over a long period of time, it eventually ends. Like, do you guys see that in the future where this stuff just ends? Like, we're not going to be watching this shit forever, right?
I already find it impossible to, really hard to watch. It's nonsense. He doesn't answer any questions straight up. He won't answer the important ones. He'll just go around them. It's just nonsense. It's like, yeah, they I don't know. It's again, none of it matters. If they have the money printer, they're going to use it when they feel like they need to, regardless of what they say. And there'll be a delay before people realize that it's happening. There'll be a delay before they publicly talked about, oh yeah, we're actually now, instead of reducing the securities on our balance sheet, we're now increasing them. Oh, okay, well, that's happened for the last month or 2 months or 3 months. And that means there's a bunch of money, new money being printed, and everything else is affected by it. And we have a delayed reaction to it. It's just, it's not right. And yeah, I do see these things just eventually fading from importance, right? Like, I think every single time the Fed does something, it becomes less and less important because there's fiscal dominance. Like there's only so much they can do because of how big the government debt is that they're directly tied to. Like there's the illusion of Fed independence, but the amount of inflation caused by government debt is, the size of the government debt is larger than corporate debt. So basically it's driving the show, and they can pretend it's not, or they can do some things slowly, but all they're doing is just making the problem worse. Yeah, there's no out for any of these people except money printing.
There's an out for everybody else though. Go down to the bank, do what you need to do, put that into Bitcoin, put some in your safe, and just stop playing their games. Like there is like without Bitcoin, I really believe that we would actually have to listen to what they're talking about and then make decisions accordingly to that, which is insane. Or we wouldn't do it and somebody else would do it on our behalf, and we'd have to pay them 1% or 2% every year, which would eventually deteriorate our wealth anyways. So it's like you have a really simple choice here now. You can just withdraw from that system. You can just opt out, because we might hear from the chairman of Bitcoin in 10 minutes from now on their monetary policy, or we won't, because we already know what it's going to be for the next 100 years. That's the cool thing about it, is that we don't need to have some dipshit come up on stage in front of a bunch of other dipshits and say the monetary policy. It's been spelt out for the next 100 years. We know exactly what that's going to be. That's pretty cool.
Yep.
And one of the crazy things here is that they're making decisions based on their limited view of the world, right? They don't know everything. What do they know about the world that, I mean, they probably they're not participating in most of the world's activities, right? They're making decisions based on their own limited view. And I guess that's all, it's all influenced by, let's say, Trump, right? Yeah. It's influenced by the House. It's influenced by all the people that have power over the financial system, and they can change rates whenever they want to.
Yeah, it's kind of crazy. Thomas here. I don't think this guy's legitimate. He called Casper in his first text. So either
Casper the friendly ghost
either needs to figure out what he's actually buying, or we just need to stop giving him any brain capacity here.
Yeah.
Did you guys see any comments worth talking about?
We got a super sticker from Carlin.
Yes.
Somewhere along the way there. We should address
Thank you, Carlin.
that. Yeah, thanks, man. He's always in our live streams throwing money down, so we appreciate that.
Appreciate it.
What do you guys think about this? I starred this one from earlier. That looks like Billy Gates in the 60s.
Dude, he's got like a one of those arrested things. When you get arrested, he's wearing one of those.
McFlash says Bitcoin can never be used as a currency. There's such a limited supply that holders wouldn't even want to give it to others. What do you guys think about that?
See, I think this is a stupid way to think because it almost assumes that people are going to starve themselves if merchants don't want anything else.
Yeah.
Right. Because when merchants watch that video of Neil Kashkari saying there's unlimited dollars, why would they want dollars anymore? At a point, there's going to be like have you guys heard of the concept called the Schelling point?
Mm-hmm.
It's basically like the thing that everybody can agree on, everybody can work with, and it's
Without
just like
saying?
the natural, yeah, without saying, it's like the natural point where everybody just aligns, right? And Bitcoin is that point, right? So with the US dollar, who benefits from the US dollar and who loses from the US dollar? The majority of the world loses because of the US dollar. So at some point, because the US dollar can be created out of nothing, and I think that's what McFlash is talking about here. The US dollar can be created out of nothing and it can allow governments to control the economy, but they're using it to their advantage. The only people that benefit from the US dollar, like think about it, all three of us are Canadian. The US government printed trillions of dollars. How did we benefit from that? We lost.
Yep.
We lost value because of it.
Unless you had assets.
If you had assets, yeah, but most people don't have assets. I don't think most people have assets. Like they have a house, but I don't even consider a house I consider a house a liability because it's taking money out of your pocket. If you don't have, let's say, stocks that are directly benefiting from the US GDP going up, then you're getting screwed over every time the US government prints money. So the US dollar helps a small group of people. And there's one comment that I always get, the US dollar's failure is going to be very painful for Americans. Well, yeah, the US dollar's survival is very painful for everybody else.
True. It's very extractive to everyone else.
Yeah.
Yeah. And it beefs up American assets at the expense of all other assets around the world and all of the other individuals. But just to speak on the technical side of this question, a limited supply is fine if something is divisible enough. If you can break something into a small enough chunk to still transfer that amount of value to somebody, then it comes down to, is it worth me spending that value for what I'm receiving? That's the only question there. And that is something that we should all be thinking of. I think it's really easy to just spend stuff with a credit card, because you're not like, that's one trick that some people try to do is just hold cash like bills instead of using a card, because it's more real to them when they're actually seeing those amount of bills leave. When you look at your bank balance at the end of the month or your credit card bill at the end of the month, you're just like, whatever, these are just numbers, right? It's hard to, the human mind kind of differentiates these two things. So really, when you hold something like Bitcoin and you recognize that the value of it's going to go up over time, even if it's fully adopted, it's still going to go up in value at the rate of the deflation of other assets compared to it. So you might be a little bit hesitant to use it, but it's not going to stop you. You're not going to be like, oh man, you know what? I'm just not going to eat today because I don't want to spend Bitcoin. You're going to spend your Bitcoin because you want to eat, you want to live in a house, you want to do things. It's just
Can
going
you
to be
imagine?
like anything else.
Can you imagine all the Bitcoiners is saying, "Oh, I don't want to spend my Bitcoin," so they start living in cardboard boxes?
Exactly. It's ridiculous. It's a dumb concept.
Doesn't make
It's
any
just
sense.
not reality. People will weigh what is the future of this going to be worth versus the value that I can use it for today, and they're going to try to find a balance of that. And I think the way society and money is today is that balance is skewed to instant satisfaction. Spend your money now because it's actually going to be worth less in the future, and there's no hope for the future. And Bitcoin reverses that and allows people to decide and more responsibly and feel secure with holding something. This is why Bitcoin is so like fundamental to like every other problem it's solving or potentially having an effect on every other problem, is because it just shifts your ability as an individual to look into the future with hope.
Yes. Yeah, I think the other thing that I would throw into that is when you think about Bitcoin, how we started this conversation was like with prices. And in a free market, as we know, well, we don't live in a free market, but Bitcoin is the closest thing we have to a free market. But prices actually come down. So if if there is a fixed supply, if there is an asset with a fixed supply, number one, you can divide it. Like Forrest said, you can divide it infinitely. We could push the decimal points 20 more times if we needed to, but that, it'll take some time to get there. But the other thing too is like prices actually come down because people actually have to make decisions. When you take away the ability to create money, which is what debt is essentially, you go to the bank, you say you want a loan, they create more money, and you can go buy things. That keeps the prices of things going up over time because there's just more and more money coming into the system. But when that gets cut off, prices actually start falling. And that's what actually happens in a free market is prices fall. Because when you have a fixed supply, there's only so many of these units to go around. And so people start valuing things differently. Bitcoiners might say, do I want to buy this half a cow or do I want to go, whatever it may be. I just feel like you're forced to make different decisions compared to when you just have the ability to create money. So I do think it's going to be a different world. And you can kind of already see that happening. If you measure things in Bitcoin instead of fiat, prices of everything have been falling for the last 10 years. That's exactly what's playing out right now because of that. So I also think that there's going to be a wrench thrown into it a little bit because for a while there's going to be more stable coins being printed, more money being created. But I think if you want to actually get those, like let's call it like a UBI, you're going to have to comply with what your government wants you to do. So some people will be earning Bitcoin, storing their wealth in Bitcoin and spending that Bitcoin. I think there's going to be two systems here for the next little while where Bitcoiners are seeing their prices fall while everybody else is seeing their prices continue to go up. And eventually people will catch on to that. As Rajat alluded to there, the Schelling point, eventually everybody figures that out. And then everybody moves over to this system where prices are actually coming down and Bitcoin becomes a unit of account over time.
Yep.
So I don't think that's it's not a concern that it'll never be a currency to me.
It's not a concern. And the ending of that question is that holders won't want to give it up to others. Well, that's the case with money in general.
Yeah,
you don't
exactly.
want to give up your money.
With real money.
Yeah, especially with real money, but with any money, you don't want to spend you're not just going to frivolously get rid of your money. Like you want to hold on to it because it's wealth, even if it is fiat. It's currently wealth, although in the future it'll just continue to trend to less wealth over time. But you want fair exchange for your wealth. That's all it is.
Somebody mentioned there, people will just leverage their Bitcoin for fiat, but that's a limited amount of time. Like you're not gonna be able to do that forever because at some point there's going to be so much fiat in the system. Like with Bitcoin, okay, so if we expect Bitcoin is going to go to $1 million, that means that technically the people who own Bitcoin can go into like what is what's $1 million worth of Bitcoin? What's the market cap at that point? 20 trillion.
Bitcoin at $1 million?
21 trillion.
Yep, 21 trillion. Yep.
So $21 trillion. That means that Bitcoiners can take on $21 trillion worth of debt and just flood the economy with fiat. At some point, there's gonna be nobody who wants fiat, right? It's just that's what people say when they say, "Oh, this is a speculative attack on the fiat system." What's happening is when you borrow money against your Bitcoin, you're adding more fiat to the system, and you're inflating prices in fiat terms. Yep. But because the Bitcoin isn't going into the system, prices in terms of Bitcoin are falling because Bitcoin's price goes up if you don't want to sell your Bitcoin. If there's no supply, if you're not adding your Bitcoin to the supply, it's there's a lot of details that go into this and it takes a little time to wrap your head around it. But once you get it, you start seeing how people won't want fiat at some point. They won't want it because it can be printed.
Exactly. It's a temporary thing in history right now that we can borrow fiat and buy Bitcoin. Fiat at some point, nobody will accept fiat for Bitcoin. And then that arbitrage, that speculative attack doesn't work anymore.
Yeah.
Yeah, it's the people who actually add value to the world who get to decide what they accept. Like if somebody makes the best ribeyes in the state and they decide that they want to get Bitcoin for their steak, people will have to do that if they want to keep eating the steaks.
Yeah.
So it's the people who actually produce the things that people want to make. I really think that Bitcoin's going to clean the whole planet of just junk. Because if you look around your house right now, how much junk was created because people don't have to make conscious decisions of how they allocate their capital. They know that they can just go down to the bank and get more money if they need to. That's a society that creates a whole bunch of junk that people do not need. And I think that that's why Bitcoin is eventually going to cleanse the earth of all this nonsense, because it's all just crap. It's all it is. The food, the products, just take a look around whatever room you're sitting in right now. How much is just crap made from other countries that they sent to us, and we sent them dollars that can be printed out of nothing. That's not a fair trade.
Yeah.
That's not a fair world. So when that stops, people actually have to make a conscious decision of how they want to allocate their capital, and they won't be buying this crap. So there's going to be a lot of businesses, I think, that go out of business because they make crap, and people aren't going to want to part with their sats, or even if it's not sats, if it's a money that's backed by Bitcoin or energy, at least, it's still a conscious decision of how you allocate it.
Like even my job was bullshit. The job that I did I worked in asset management. I was working at TD Bank. It was a bullshit job. It was just people were trying to run away from inflation, and they were still dealing with it because they were getting like 1% returns when inflation was like 2 to 3%. So they're losing money, and they're paying me to lose money for them. That's crazy.
It's nuts.
That's so wild. Like the entire system is designed to extract value from people who don't question it.
Yeah.
That's
There's a whole bunch of jobs like that that are just extractive at different layers. Just, we'll just take a little bit here. We'll help you with this. We'll just take a little bit. And all of those jobs are meaningless if you have sound money. None of them are necessary. If you can just save in money, and your savings grows at the rate of the decrease of value of everything else against it.
Crazy, boys.
Yeah.
Crazy
world. Do we want to get any more topics? Did you guys? I've been missing the comments here. I guess super chat.
Super chat. Yeah. I don't know what that currency symbol is. I've never seen that before.
Yeah, me neither.
It's a nice number though. 6.9. Nice. What was I going to do here?
I think it's Israeli shekels.
Interesting.
Really?
I think.
Israeli shekels.
Yeah.
Huh. Well,
Israeli new shekel.
Either way, we do appreciate that. And mostly the comment there. Love you guys.
Yeah, appreciate that. Very, very kind.
We got a couple more zaps here too. 23. I'm guessing that was Todd. We got a couple 1845s.
Wow.
Guessing that was Sin, and 121. So thank you.
Nice. And that's through this Lightning address right here. If you guys wanted to send those in, that's like the Bitcoin version of a super chat. You can scan that and send some sats, and we'll read out. You can attach notes to them so we can read those out.
Hey, maybe we can talk about using your Bitcoin finding. How much time do you guys have left? Are you guys okay with?
Yeah, a little bit more.
A bit.
Sure.
I was thinking maybe we can talk about finding that balance, the topic that we were talking about before. And we can even, if we need to, we can clip this out and put it into a video. But I think that's an important topic, right? Just finding the balance. So the reason, are you guys okay with that?
Let's do it. Yeah.
Yeah. Okay. So a question that I've been getting a lot, just constantly, aside from the questions in the chat, this one question that I've been getting is, how do you know when you have enough Bitcoin? When do you stop buying? When do you know if you have enough so that you can start enjoying your life? How do you guys define that? What do you guys do to define that? And Art, yes, exactly. Another 4-hour one.
No. This is something I think about all the time. And when people say, how much Bitcoin do I need? It's such a hard question to answer because everybody's in such a different position. Everybody's a different age, unless you have an identical twin out there or a triplet. Everybody's a different age. Everybody's in a different country. Everybody has different goals, and everybody has a different lifestyle. So it's impossible to say this is how much Bitcoin you need. So in that sense, I don't think there's a number that exists, but I have kind of changed my mind a little bit on this, because I think that people should actually figure out what the amount of Bitcoin is that they want, like their target amount of Bitcoin. Because I think that that's important. If you don't have any sort of goal or direction to where you're going to, I think you're just going to kind of float around at sea forever. And so I think that people should figure out what the number is, what they're going to do with that eventually one day. Are they going to keep it mostly for themselves to enjoy their retirement or their life? Are they going to give some to charity? Are they going to keep some for their family, for their last name? What's the allocation of that? And then make a plan to get there. And I think when you actually break it down and you start maybe reverse engineering some things and saying, okay, well, if I want to get to 1 Bitcoin by 2030, this is how many sats I have to stack every day. And you can kind of work backwards like that. And I do think that that is actually a worthwhile task for people to demonstrate themselves. And you can use things like Rajat's calculator that he has. You can use like the compound annual growth calculation to see what it's going to be worth at what year based on your spending, like how much you spend every year. But I do think that that is something that every Bitcoiner should be thinking about in terms of like how much Bitcoin do you think that you need and what are you going to actually spend it on? And then what's your plan to get there? Does that make sense?
I think that's a good idea. Yeah.
I have a pretty solid number that I've been trying to run through with my compound interest calculator. I think that number is about 10 to 12 times your annual expenses. So let's say your annual expenses are $100,000 this year. Bitcoin grows at 25% per year. If you have 10x that, or you can wait, let's say you want to go to like 15, 18x. I think after that, you're a little bit excessive. So let's say you're spending $100,000 a year and you feel burned out. You don't want to work anymore. You don't think you can accumulate any more Bitcoin, but you keep going to work. I think at that point you're going excessive, but it doesn't really hurt. Obviously, it doesn't hurt to have more Bitcoin, but you have to find the balance between enjoying your life and spending time with, let's say, your kids or your family or your friends, whatever. Because the time that you have on Earth is not guaranteed, right? You could get a disease at some point, and you have a year to live, right? You don't know. You have some kind of terminal cancer where you have 6 months, right? What are you going to do at that point, right? That point where you're thinking that, oh, I'm going to do this and this, and I'm going to have this much Bitcoin. That point may never come because you may never be able to get that amount of Bitcoin.
So, okay. So can we walk through that a little bit, Rajat? You said 10 times what your expenses are is how much Bitcoin, like how much US dollar worth of Bitcoin equivalent.
Yeah.
you
10 times your annual expenses. So in the fiat system, you have 25 times where you have the 4% rule.
Right. Okay. So then the idea would be that at that point, you could start selling your Bitcoin to live off of it. Is that the concept there?
Potentially retire off of it. Like you keep that Bitcoin, you could use it to take on loans. So let's say, for example, in this example, we have $5,000 monthly expenses, and I put inflation at 5%. Let's say you're buying $20 worth of Bitcoin every week. Bitcoin's growing at 25%. I know $20 a week is very low, but in this case, let's say you have $20 per week, and let's see here. So your fiat stack divided by your expenses, that's the column M here.
Okay.
So in 2053, you'd have about 11.4 times. So your annual expenses would be 235,000 per year, and your Bitcoin would be worth $2.68 million. So in the following year, let's say you do withdraw some of your Bitcoin, you'd have 4.5 million Satoshis. If you withdraw some of your Bitcoin, let's say you withdraw enough to pay for your expenses, or you take on a debt to pay for your expenses, your Bitcoin stack is still going to grow faster than whatever your expenses grew by.
Right. So that's the concept here, is to get the stack to a level where it outgrows your expenses, even with added inflation.
Exactly.
That's really cool. This is a really, really great calculator you've set up here, spreadsheet.
I appreciate that.
I think that's a good way to look at it, because if you just set kind of a goal, like 1 Bitcoin, that's something a lot of people try to get. It's just kind of arbitrary. It's like, well, 1 Bitcoin, what is that? That's 100 million Satoshis. Why 1 Bitcoin?
Why exactly?
Is it just because it's going to be significant at a point? But this really actually creates a realistic, I mean, obviously all these numbers are going to be incorrect, but you have to put in some inputs, right? Like the 25% CAGR might be off, the 5% inflation might be off, but this still gives you a realistic model to go off of, and you could always go a little bit more than 10 times your expected expenses. You could try to get there a little bit quicker. Like you could adjust some things so that you're sort of more conservative with it, so you have more leeway with the variables. But this makes a lot of sense. This is awesome.
And if you have 1 Bitcoin, technically you should be able to retire by 2035. So that Bitcoin, if Bitcoin grows at 25% per year, 2035, 1 Bitcoin will be worth $1.07 million. So your expenses at that point, if there's $60,000 a year today, they'd be about 100,000 a year in 2035. So your stack would be 1,100% of your expenses.
Interesting.
And then with that stack, if you take on a really, really conservative loan of using 5% of your 5% of your stack as collateral, and then using 50% loan to value on that 5%, you could take on a loan for $27,000.
So that wouldn't cover all your expenses though, because what are your total
It
expenses?
wouldn't. No, it wouldn't cover all.
I wonder. I mean, 5% is such a low amount. I wonder actually
Yeah.
how much you. So, what is your total expenses for that year?
So so let's actually take a look at that. So in 2043, your expenses would be 97K. So 2035,
97K.
97K. So in
26.
2043, your expenses would be 144K.
Mhm.
Your 5% collateral, 50% LTV loan would be 160K.
Wow, interesting. So you could put
Yeah.
up 5% of your Bitcoin as collateral to pay your expenses at 2043, or at whatever it was 2035, it would be more like between 15 and 20% of your stack to pay your
Yeah.
expenses.
So 2035, it would be, so 15% would give you 80,000, 20% would give you 107,000. And then keep in mind, you don't have to pay taxes on this. So that's crazy.
Yeah, that's true. But you can't. So you can't. So that's the thing with the loan, though, is that loan either has to be repaid or just refinanced. So you can't just do that nonstop, right? There is sort of a limit to that.
I mean, technically, you can keep rolling it over, right? If you
could roll it over, but you can't extract more value out of it unless the Bitcoin value increases and you can extract that
Right.
additional value out of it.
The
But it
Bitcoin
wouldn't be
value has
enough to
go up,
just.
yes.
I mean, at a certain point, it would be enough to. The refinance alone would pay for your expenses, but that would be further down the line. That would be a hard thing to calculate, but.
Yeah, that's the hard part. See, that's why even what you said there before, these numbers aren't completely accurate. I mean, who can predict the future, right? I don't even know what inflation is going to be in 10 years. But if you use this as like a guide, if you just use it as a way to, if you just use it as a way to try to make decisions for the future, then I think that you're going to be in the right track, right?
Yeah.
Like people think that, if I can only buy $5 worth of Bitcoin, it's not even worth it. But let's say you buy $5 of Bitcoin every week. At some point, that $5 worth of Bitcoin is going to be worth a house, right? So $5 of Bitcoin per week, 5% is your increasing, your inflation rate is going up by 5%. Your house that you want is worth $650K. So $5, keep in mind, this is $5 a week, $5 a week. So at some point, that $5 per week DCA is going to be worth 1% of the house. Then at some point, it's going to be worth 10% of the house. Then at some point, it's going to be worth 100% of the house. So if you think about it, let's say you wanted to save for a down payment. You're probably going to save like 5 to 7 years for a down payment, right? And then you add 30 years for your mortgage. So if you combine that, you're going to have like 35 years into the future. In 35 years, you've basically paid off the house in cash with $5 per week.
And every year you're getting less Bitcoin. You're able to buy
Every
less
year you're
Bitcoin
getting,
with that. So it's really just the stack that you're buying over time growing in value, because it contributes to it, but every year you're getting way less and less Bitcoin because the value of Bitcoin's rising compared to the dollars that you're putting in.
Yeah, that's it. That's exactly it. Like, and then with this house, let's say you keep buying for 36 years. You would have put $9,000 into Bitcoin and you would have gotten a house that's worth $650, $650K today.
That's
crazy.
insane.
It's crazy. Like this is the motivation, right? Whatever you can put into it, even if you can put $1 a week, $1 a month, at some point it will add up.
I think so. What this goes back to the balance thing though, right? Like you see this and you're just like, well, I can buy every single year, I can buy less Bitcoin. If I just front run this, if I just smash buy, if I put every single thing into it, if I eat beans and rice and live in a cardboard box and everything goes into Bitcoin, I'll be living in, Hollywood Hills in 2035, right? It's like, so that because of the reality of this, it really does pull into question that idea of balance. And I think that's why this question is so hard to answer realistically, and it is so specific, is because of how powerful buying Bitcoin is to reaching financial goals, and how it just really incentivizes you to sacrifice to be able to buy Bitcoin. But there is a balance to reach within that. Because
then one
as
of
you
the-
said, the balance there is right there. Like that's $5 a week. Anyone
Yeah.
can do that.
$5
Right?
a week, yeah. And one of the crazy things here is like I know a lot of people like they're serious about putting money away, right? Sorry, I'm just bringing up the spreadsheet again. If
Oh.
you're able to put in $1,500 a week into Bitcoin, you're gonna be able to pay off that house by 2031.
Yeah, that's not far. That's 6 years from now.
That's crazy. In 2031, you would have probably saved up enough for a down payment if you saved in fiat.
Yeah. That's what's crazy. I'm doing this $100 a week public buy and posting about it, and people are like clowning on me for it. Like they think it's hilarious that I post and do this whole big. It's like a replica of what Sailor does every week, and it's $100 Canadian of Bitcoin. And I retweeted it and I said, this is actually going to look crazy down the road, like that I got 62,000 sats for $100 Canadian.
Yeah,
and like people are like laughing at it, and it's like $100 a week is going to just go nuts. $100 worth of Bitcoin a week is going to go nuts down the line.
Yeah.
Yeah, that's significant, man. That's a big amount. I mean, look at this spreadsheet, $5 a week, right?
Exactly.
Let's go with $100 a week. Let's see what happens. So $100 a week.
Is that what you're buying for us? $100 a week?
100 Canadian, but yeah.
Oh, 100 Canadian. Okay.
It doesn't matter. We'll just do
CAD.
US, whatever.
I'll go CAD.
Oh, there you go.
So 100 a week in 2033, you'll have 128K.
That's crazy.
That's crazy. Yeah,
That's
insane.
gonna be hard to keep public, to be honest, because that's a lot. People are gonna be
13.5
like,
million satoshis.
You have to slam half that into personal security.
But see, that's one of the things, right? That's why we're making these videos, because I mean, I keep saying this. It's a little bit selfish for me. One of the reasons why I make these videos so much is because I want other people to accumulate Bitcoin so they don't come after mine.
Yeah.
Yeah.
Right. Like if somebody who can buy, like somebody who has $20,000 to set aside today, they can go and buy 13 million Bitcoin or 13 million Satoshis. And when you get to that point, they're not going to be jealous. They're going to be like, oh yeah, I got to that point so long ago. Why is this guy delaying it? He's public and he's teaching people about Bitcoin, but he took this long, but I got it done. It's just a way for people to think like, okay, I can do this too. So I don't have to commit crimes to take somebody else's Bitcoin and to sustain my life, right? That's what Bitcoin does.
Yeah, you know, those people that are going to take your suggestions and buy a bunch of Bitcoin, they're going to be so wealthy, they're going to hire security for you.
Yeah.
They'll just be like, you know what? You deserve it because of because I was able to listen to you, and you shared so much value.
So somebody mentioned 500 a week. So with 500 a week, you'd have, so your Bitcoin stack would be worth 219% of the price of a house by 2039. Your stack would be worth, it would be 0.78 Bitcoin, 78 million Satoshis, worth $2.8 million. And I think that's pretty reasonable. 2039, $3 million Bitcoin.
I would say so. What is that, 15 years?
This is 14 years. Yeah. 15,
Yeah, so
14,
pretty much double Bitcoin's lifetime. I would say so.
Yeah. And then at that point, if you wanted to just buy a Bitcoin, or sorry, if you just wanted to buy a house, it would cost you like 0.36 Bitcoin.
Wow.
That's crazy.
Yeah, you know what? I looked at a house. We're thinking of moving. We're going to rent, but I looked at the house and it was 550,000. It was listed for, and it had just been foreclosed, and it was completely gutted, and it was literally like a crack shack. Like, you guys aren't from BC, but there's BC crack shacks are like a thing for real.
Yeah.
And I was just like, this is what $500,000 buys you. Like, it's insane, and that's like 4 Bitcoin in Canadian dollars, right? And it's like
3.45 Bitcoin.
Yeah, I'm gonna spend 3.45 Bitcoin on this house that needs another 2 Bitcoin put into it to make it livable, and like it's just insane. Like, these things are just not worth that.
Yeah,
anyway.
They're not. Definitely not. And that's the thing, right? Finding that balance is so key, because let's say you rent today and you make the decision to not put your money into a down payment. You put all the rest of the money into Bitcoin. You'll probably have a more balanced life in the future than somebody who puts all their money into a house today.
Yeah, 100%.
Oh yeah, I think so. Yeah.
And you really got to ask yourself, like, why is a crack house in BC selling for $550,000?
Yeah.
And I think if you ask yourself why, and you say, okay, well, maybe it's because they printed so much money, People have all this money. They don't know what to do with it. Real estate historically has been the best store of value. It's no longer the best store of value. And so eventually that price will flow into Bitcoin. There's all that capital that's just built up in these, houses like that where nobody actually lives. They're just using that as a speculative asset, assuming that BC real estate will always go up. But eventually it's not. It's going to stop. It's going to stop going up. And because people are going to realize the fact that, hey, we don't need to pay property tax on this, because you have to keep that in mind too. As they raise the value of those houses, as it goes from 400,000 to 500,000 to 600,000, your property taxes are a percentage of the valuation of it. So rental owners and people who are storing their capital in real estate right now are just going to get fed up with it. It's not going to be worth it to them. And all that's going to flow out of real estate and into Bitcoin. And that's when you actually want to be spending your Bitcoin. When that happens, we're not there yet, but that day is coming, I think, and it's not going to be too far away.
The other thing that we need to look at with Canadian real estate is how important it is for the government to get those tax dollars from property taxes, and it's based off the assessed value. So if the assessed value starts to go down, they're not able to continue to raise the property taxes and use that to fund all the great programs that we have here in Canada, all the healthcare, all the doctors that every single person has, right? Access to with our free healthcare. I've been on a waiting list for 8 months. We have a kid. We don't have a doctor.
Wow.
Awesome. Great. Love it. And so like the property value is so tied to the tax receipts of the government. So there's a huge incentive for the government, the way the systems work, to keep the dollar value of this property way up beyond what it's actually worth, just because of that.
Yeah, think about it. Think about your local city or municipality or wherever you are. Like their salaries, all their projects are pretty much funded by property taxes in that area. And so if the value of these houses start coming down, then there's going to be less collections. They're going to have to start firing people. That's not what they want ever in government. They don't ever want those property taxes to come down. But the reality is that governments are just losing relevance, influence, power by the second of every day. And so it's going to be a point, whether they want that to happen or not, it's just it's going to happen.
Yeah, it's inevitable. I mean, why put up with it? Like if there's tyrannical government to any degree, and then there's some place with non-tyrannical government that's not going to steal everything from you, that's a pretty easy decision to make, right? And then the government that isn't like that benefits, right, from being fair and from cooperating and doing what the public actually wants from them, right? Like government in itself is not a bad idea. It's just way too powerful and way too strong and way too influential and controls way too much, right?
Yeah.
It makes sense that we organize and do group projects together and have some sort of funding mechanism for that to some degree.
Yeah.
Right. To some degree is the key point there. So, smaller governments is basically what we need.
And then what about if, let's say, they do increase property taxes? There's nothing you can do to leave. You're trapped.
Yep.
Can't bring your house with you. And then what are you going to sell? And what if everybody else's property taxes go up at the same time? Like there was this comment here, actually, houses in Ontario haven't been reassessed since 2016 due to COVID. That's really interesting. So yeah, what if they reassess all houses in an area all at once? All of a sudden, the affordability of these homes for people that live in them, it become a lot less affordable because of that property tax has to be accounted for. And then what if a bunch of them say, you know what, I can't afford this anymore. I'm going to sell. And too many sellers.
To who?
Exactly. Too many sellers in an illiquid market creates massive price fluctuations to the downside.
Yeah.
And that would be terrible.
There's going to be a bunch of things like this that I think play out in the coming years. And I think one of those is like, if you think about a small town who had like a big plant come to it recently, there's a couple in my area here where there's like a hog plant or something showed up, and the town pretty much doubled or tripled in size because of all the employees that came to work for these plants. And so I think that there's going to be towns like that where some of these plants, the people working at these plants are going to be replaced because robots don't get tired. Robots don't get sick. Robots don't have bad days. And if they can do all the same tasks as a human, but without all the negative impacts of a human, then that seems like a no-brainer. All these companies are after the bottom line, especially in, you know, an inflationary environment like this. And so what happens then? What happens when the plant that brought all these people into this town is no longer there and slowly get replaced by robots? Then the property values in that town, who's going to buy those? And what happens to that town overall if they don't have any more property tax coming in? This isn't something that happens over a year or two, but looking out into the future, like this is the trend I feel like in a lot of different areas of the world. And so the nice thing about Bitcoin is I think that you're actually going to be able to have options of where you want to live. It is going to be a big choice in the future of where you live, you know, what kind of community you have. You have the power now to be able to decide where you want to live. And I think that governments at the same time will actually want Bitcoiners once they figure it out. Again, this is all kind of long into the future, but they're going to want Bitcoiners to live in their country because they represent true economic power that cannot be printed. And so
they want that wealth distributed from
exactly,
the citizenry
and put in back into the system. And so if you think about how hard it is and how, you know, the war that we're going to go through in the next couple of years, on the other side of that is everybody's going to want you to be in their town, in their country, in their bank, all that kind of stuff. Everybody's going to want Bitcoin, Bitcoiners.
Yeah. And the
Really
thing is, you mentioned the robots there, like it's robots and AI, right? It's automation through technology. And if the thing is here is if robots and AI can do your job, and if they can, or you can see a potential future where they'll be able to, they will take your job. That's just the way of it. It just makes sense, business sense, because if one business does that and it becomes a way for them to save or make more money, they will outcompete other businesses that don't do that. And then the other businesses are forced to do that. So, I mean, one way, like this is where Bitcoin ties in directly to that is Bitcoin is a safety net. If you are able to acquire it, and if you are actively working on retooling, reskilling yourself so that you can't be replaced by robots and AI, which I think the jobs for humans in the future are much more like emotionally intelligent jobs and you know, jobs with empathy and human connection. Like these are the jobs that are really important, and trust and belief and, you know, like human connection to some degree. I think those are the jobs that are very, very, very difficult for robots to replace.
Building brands, I guess.
Yeah, like trust, like even us, right? Like we can't be replaced with AI because people won't trust AI as much as they trust us, right? Like there's an element of trust with who we are as individuals and what we share. So that's part of that's more difficult for robots and AI to take that place. And I'm purposely not saying that it's impossible for them to take the place of this stuff. It's just more difficult, and it'll take longer before that happens, if it does happen. But yeah, I mean, this just all, and the thing is too, is like they should take those jobs. That's maybe divisive, but or like, you know, if you haven't really thought about it too much, that might sound callous. I'm not wishing upon people to lose their jobs and become homeless and destitute, but I'm just saying humans are so unique. Every individual should be doing what is the best job that they can do, which is not working as a cashier somewhere. You have more potential as an individual. If a robot can do that, which they can, a robot should do that, and you should do something more meaningful.
Yeah,
that's
the key, because we have our experiences, we have like how we live, we know about, we view the world a certain way, and we can create solutions based on that, right? Like a robot's not going to know that, this and this is happening in this person's life, so this is how I'm going to solve it. Maybe you can input something into a robot to give that kind of solution, but the creativity is probably still not going to be there.
Yeah, the creativity, I think the ability to maneuver, the trust factor that Forrest mentioned, and I think also just the what am I looking for here? Like the imperfections almost.
Oh yeah.
You know, human. Like, that's human, right? And that's why people show up to watch humans, because somebody could have created an AI video in 5 minutes that would have been 5 minutes long that summarized pretty much everything we talked about here. But that's not what people like. You could get all the same information quicker, faster,
but it's not the same experience, I guess. That's kind of what I'm looking for too. Because when I pause for 3 seconds, it's just kind of, it it keeps you engaged a little bit instead of like a robot that's just spitting out facts that you can't even keep up with. So I think that, and being relatable, nobody can relate with a robot either.
Yeah, and it's even like that imperfections is a really good way to put it, because even physically there can be robots that are very human looking, right? Like the real dolls and all that shit. But there's an uncanny valley that is incredibly difficult to get away from with robotics and with replicating human behavior and looks and everything that goes into everything that is robots versus humans. There's an uncanny valley that it makes it next to impossible to replicate. Again, not impossible, but just like it's very difficult to move away from the uncanny valley that touches all AI and robotics.
Yeah. Take a look at this. One cell, and there's what, trillions of cells inside of us?
Interesting.
I think, yeah, trillions, I'm pretty sure. I heard it was billions in your brain yesterday.
Yeah, that's crazy. So one cell has 0.75 gigabytes of data. That's crazy.
I wonder
So
how
that
that's
means that-
represented. How is that? How can that even be measured? That's so interesting.
I don't know. I actually don't know how that's a really good question. I don't know how that would be I don't know how that would be measured, but keep in mind that like think about it. This one cell is the equivalent of the entire Bitcoin blockchain. Right?
Wow. That's crazy.
That's insane. So that just shows you that we can carry more data than computers, and that's what makes us so unique. It
Yeah.
makes us alive, right?
Wait,
With robots, you have like a certain programming that they have, and to change that programming, it'll take some time. That's why you have to test robots. You have to keep putting them through multiple tests. You have to keep putting them through all this stuff that gives them the experience. But with humans, we already have that. It's already built in us. It's innate. Like we have it. It's what is it called? It's like built into us. We're designed for it
Mhm.
to be like random and spontaneous. But
Mhm.
robots can't do that.
Yeah, and I'm sure people are working on making that randomness and trying to design like a human robot, and maybe eventually that does happen. I don't know, but I think it's a ways off, and I think that you should kind of, yeah, I don't know. It all kind of comes back to like the jobs thing, like robots are taking jobs, AI is taking jobs. Make yourself valuable in ways that will be the furthest, the longest away from robots and AI being able to take that from you. And that is being a human. Your job has to be the most human possible, because that's the hardest thing for robots to recreate, is the human aspects.
I think, exactly what you're saying there, Forrest, is people really have to do some self-reflection, I think, and ask themselves, what are they good at, what they enjoy doing, and combine those two, because there is not a robot that could be recreated that's a version of you, of Forrest, of Rajat, of Jor. Can't. It's impossible, because there's only one you on the planet. And that's when you think about getting jobs and competing with each other. And there's a guy named Naval Ravikant, and I absolutely subscribe to this theory in the sense that you don't have to compete, because there's nobody else on this earth that's exactly like you. So if you can just utilize the specific skills that you have, then you can turn into something that nobody's going to replace, whether it's another human or a robot. And I think that that's what people should actually be thinking a lot about right now in terms of going into this future, because the reality is there's going to be a lot more. This is just the very, very beginning of the AIs and the technology and the job loss. This is just like the first chapter of that. It's going to get much, much worse. And I'm sure the world will, as long as we're living in a manipulated system, it's going to find a way to keep people not burning down government buildings. They're just going to balance that line before people come out with pitchforks. So it's going to last a while. But I think you need to be thinking past that and what you're going to be doing on the other side of that.
Well, there's going to be like a premium for humans.
Yes.
If you think about that too, like, sure, an AI or a robot could do your job, but that'll sort of just be like the base layer. Like people will, if they can't afford anything else, they'll have a robot do it. But if you want like human care, that's going to be extra, right? Yeah. Or human touch, that's going to be extra. So there's actually going to be a premium on human work.
Robots are going to be they're going to be trafficking humans.
The damn tin skins.
But I mean, it all goes back to the same kind of stuff when we're talking about humans versus robots and real value here. Like, think about it. Think about the time and energy that it takes to actually create a human being.
Takes about 2 or 3 minutes.
It takes about 2 or 3 minutes, but the build up or the build up of that point,
Oh man.
and then the next 9 months to follow that, and all the work and all the food and all the energy that it takes, because robots can just be
sorry guys,
robots can just be created. You know what I mean? I feel like humans are Bitcoin, robots are fiat.
Oh wow, there we go.
It's true.
Yeah, I love that.
It's true. And I think that goes back to the balance, right? Where you were talking about Naval, where you're the best at being yourself. You're the best at showing people your experiences, telling people about your experiences. And I think that's where that balance comes in. Because if you're doing what you do best, it doesn't even feel like work. And it just feels like I can create so much value and I can turn this into Bitcoin and I can use this to carry my legacy for decades. Right. And when you're doing what you love, it doesn't feel like work.
100%.
It feels like if you're putting, so let's say for example, when we make these videos, I don't feel like I'm working right now, but we technically are. Right. I don't feel like I'm doing anything strenuous. I don't feel stressed out. I don't feel like my brain is going to burn out any minute now. I don't feel anything like that. But
you've also put in a shitload of work to get to this point, though.
It's true. But I mean, anybody could, if it's just consistency, right? I would say it's consistency of being yourself.
And you, but you probably
right.
enjoyed that work too, like that education that you have now. Like I know I did. Like I enjoyed learning about Bitcoin to the level that I'm at now, where I can talk about it, or life experience, all that stuff. Like, and this is fun. It's been fun the whole time, and it doesn't mean that it's always good, but like for the work is, when you're doing what you love, like it's going to be challenging, but that doesn't mean that you hate it just because it's challenging.
Agreed. Yeah, that's the thing, right? Once you start doing something that you really like, it doesn't feel like work. It feels like you're not really stressed out. It gives you that balance where you feel like you're having fun while you're making money. And again, if we go back to that balance part, it'll give you more of an opportunity to buy way more Bitcoin.
Yeah.
Yep.
Exactly. Yeah. That's the other thing too, is like, if you don't like what you're doing, there's probably going to creep into your life some expenses that are just to offset the disappointment, the lack of dopamine, lack of serotonin, all this kind of stuff that you could naturally be getting from the type of work that you do if you're doing something you enjoy more. Maybe you need to go on an expensive vacation. Maybe you develop a habit of some kind that takes away from your ability to stack. You feel less fulfilled, right? Like I think being balanced, like the idea of balance in this conversation all comes back to like the idea of living a life that you enjoy and feeling purpose from what you're doing. Feeling just relatively happy, having happy moments and all this kind of stuff. If you have that in your day-to-day life, you won't feel the lack of that you could feel otherwise, and try to fill that void with things that are expensive.
I think that actually, so this is just a complete, I guess, almost like a tangent. I think that ties into how a lot of people are so addicted to gambling because their life is so consistent. You go to a job, you know exactly what you're going to do every day. With gambling, with like sports gambling, you don't know what's going to happen tomorrow or the next day. You don't know which team is going to lose, which team is going to win. So I think that this stability where people are doing their 9 to 5s and they're just doing the same shit over and over again, it forces people to want some kind of dopamine hit, right? And that's the gambling. Because when you're going to work, what's going to change? It's the same shit every single day. Same thing every single day, no matter what. Like you're doing the same thing over and over and over again. And then with the gambling, of course, there's a difference. There's a change every single day. There's a new experience that you get. And I think that's what's made people so addicted to that experience, where they don't know what's going to happen tomorrow. So they get stuck in it. They get stuck in that cycle.
It's a break from their usual.
Yep. Dopamine is a hell of a drug. Completely agree, Sin Diesel.
and they have the chance of hitting it big. But that's the question, and that's what I think we should maybe end the conversation with today, boys, because it's Wednesday. We don't usually do these on Wednesdays. We're going to be back here on Friday and 2 days from now. I think it's probably worth carrying this conversation on. Like there's so many different aspects to talk about within this. Like I have 5 or 6 things that I wrote down here that I want to talk about, but we just don't have time today. So the one thing I would say is when people are looking at all these different numbers and thinking through this stuff and when can I retire off my Bitcoin, what are you going to retire into? How are you going to fill your days?
That's it.
Because if you're like, are you planning on just sitting around on the couch and eating potato chips? Because that's not a life that you really want to live. That, as cool as that sounds, because you don't have to, overstress yourself too much. It's like you really have to ask yourself what it is you want to be doing for the next 50 years and see how Bitcoin fits into that. Don't try to waste all your best years, which are presumably right now, for some later goal, because as we kind of talked about, it could change in a flash. You could be gone. And so you're spending all your time doing something you hate for this far off goal that might not even show up ever.
I like that idea of retiring into something and preparing for it. Like for us, for example, we could literally do this. If YouTube exists the next 50 years, we could do this for the next 50 years, as long as people want to learn about Bitcoin. And we can keep going. We have our personal brands. We can like turn this into something else. At some point, we can definitely do that. And I think that's that's a really great point there, because you don't want to, let's say, for example, if you want to travel during your retirement and you don't retire and you don't travel while you're working, how do you know that you're not going to hate it?
Yeah. Yep.
Man, there's so much to it. Like so many people retire at the age that they're supposed to with society, and they can't go. They want to travel. They've traveled a little bit and they enjoy it, so they want to do that, and they can't because now they have medical issues and they have to be close to a doctor.
Yeah.
It's like you work all your
imagine,
life to not be able to do what you want to do. That's crazy.
When I went to Argentina, I went on this really long hike. It was like 9 kilometers each way, so 18 kilometers total. I was thinking, if I had delayed this until I'm like 65, 70, if I had like threw my back while I'm on this walk, what am I going to do? How am I going to get back? I can't.
Yeah, I'm a big believer in mini retirements along the way.
Yes.
Yep.
Agreed.
That's a Tim Ferriss concept, 4-hour work week.
I really like that idea.
Should we, sorry, Rajat, what were you saying?
I was just going to say, awesome. Yeah. That's a really, really great idea.
Yeah, maybe we should talk about that on Friday's episode. So I guess maybe one actionable item I want to kind of talk about here before we go is maybe we'll continue this conversation on Friday. So if you're watching this right now or later on any of these channels here, leave a comment. If you have like a question, if you have a certain topic within this area that you want us to discuss, maybe we'll kind of lead the conversation off with that and just kind of get the ball rolling. Again, I have some points here, but unfortunately, we couldn't get through all the comments today. There's a lot coming in here. So if you have any like comments, discussion points, questions, I think that'd be a really good way to kick off the conversation on Friday to just keep this conversation going. What do you guys think about that?
Can you just highlight that comment from Bobby C? He sent a super chat.
Oh shit, I didn't even see it.
You can stop buying Bitcoin when you earn it for wages or mine a block. Agreed. As long as you're creating value, you can keep buying Bitcoin literally forever.
Yep. Yeah, there's no point in life where you're going to be like, okay, well, I've hit my Bitcoin goal, so I'm going to start saving in fiat now.
Yeah.
No one's ever going to do that.
Yeah.
And this last one here, we got another 6.9 shekels. I would say the later the better for that one, because we still need to get a bunch of people into Bitcoin before the government starts buying it, because we want people to have Bitcoin, not governments.
Yeah.
Yeah. I mean, I don't know if they deserve to save themselves, because buying Bitcoin will save them to some degree. But they've done a hell of a job at causing a lot of destruction. So maybe you reap what you sow. But yeah, I think they'll actively acquire it to begin with from stealing it from people, which is what they've already done. And then, I think at some point they'll just have to print money, and they'll probably do it quietly as possible, and they'll print as much money as they can to buy as much as they can. I don't know when that happens, but it'll be when the cracks are really showing that people are losing faith in the dollar. I mean, it's already there. It's already really obvious. We're not in an AI hype bubble. We're not in a real estate bubble. We're not in a crypto bubble. we're in a dollar death spiral, and that it's just
That's true.
all of those things are priced in dollars, so all those things are up.
100%.
Yeah, when everything's a bubble, it's the currency that's a bubble.
Exactly.
Okay.
So maybe it'll come sooner than I think, but because that is pretty obvious, and I think some people are starting to wake up to that.
Yeah.
Slowly but surely. Big shout out to Todd, who sent another 2323 zap in. And somebody sent in 3,000 sats and said, I love Rajat spreadsheets and appreciate the conservative analytics. From a fellow Maxi, thank you, Maple Bitcoin. Love that.
Nice.
Amazing. Hey, Forrest, you should share the Pleb Tools site as well. I feel like
Okay.
because you converted a bit of it to that. I think that's
I
awesome.
actually that compound calculator, I actually did that one.
Oh, amazing.
So people can, and there's also a retirement calculator that Birdie's Bank from Maple Bitcoin, the school community, built. So he's the first contributor to the code base. And that retirement calculator actually is really, really cool.
Nice.
But yeah.
And some of Rajat's stuff are in these, right?
Yeah, this is built off Rajat's. So Rajat's also a contributor, open source contributor with some of his spreadsheets. So this one's built off of that, and one other one. Let's see.
I'm an open source contributor, but I have no coding background. I don't even know how to code.
The
I love
Bitcoin
it.
loan LTV calculator was also built
Oh,
off
amazing.
of one of Rajat's spreadsheets as well.
That one's really good.
Add it to your resume, Rajat.
I will. Coding without learning how to code.
That's what I do. I don't know how to code. AI, it's taking my job. It's taking somebody's job.
That's right.
Think about it. Like we would have probably had like 20 other people working with us if we didn't have the kinds of tools that we have today.
Yeah.
Yep.
That's what news stations were built on before, right? They had all these people working together. They had to. And now we can we can take their funding by creating better content and by having less costs, way lower costs.
Yeah.
It's crazy.
It is crazy. All right. Have some keggers this weekend. Actually, we're going to be here Friday. So yeah, enjoy yourselves. Thanks again for tuning in. Sorry about the first 2 minutes there, but we got it figured out here. So consider joining if you haven't yet. There's a lot of people in there already, and it's getting better by the member. So I got the school.com/Maple Bitcoin there. It will be the best investment you ever make, right up there with Bitcoin. You got a great group of people in there, people collaborating, building, learning from each other. We got a ton of exclusive content in that community. So try it out. You can try it for 7 days. If you don't like it, you can cancel it. You won't offend us at all. But we do really believe that you will get a ton of value in it. We want to add so much value to it that it doesn't make financial sense not to join. So thanks, Forrest. Thanks, Rajat. Thanks, everybody, for being here today. And we'll be back here on Friday. Thanks, fellas.
Awesome.